Hey, it's Soleil, and this is episode 92 of the Orange Pill Investor. And today I want to talk about your dad. And the reason is because our dads, our grandparents, they could just get a job, work their job, put money away, or just use their house as a savings vehicle, and then they pay it off after 30 years, and then they leave it to their kids, and it was all good. But now inflation is like inflation has averaged probably 10% over the last 100 years, and I know people will take issue with that, but the CPI just came out. They said it was like 3%, 3.5, or whatever, and it was they thought it was going to be 3.4 and it was 3.5, and people think that's a big deal, and that's some bullshit. So if you really want to know what inflation is, you can basically just look and see what a basket of desirable assets cost you. And the SPY has gone up 7% a year for 100 years. Real estate, desirable real estate, that is, has gone up 7%, I think, for the last 100 years. So that's all you really need to know. That's the price of inflation, because Netflix is getting cheaper forever. So that's not inflation. That's meaningless. That's a meaningless number. If you don't have Netflix tomorrow, it doesn't matter. But if you can't buy a house, that matters. If you can't store your money for retirement, that matters. And the reason why I say inflation is probably closer to 10% is because technology is naturally deflationary. So we should not be experiencing inflation. The natural state of human development is deflation. iPhones are getting more expensive to an extent, but they're getting incredibly better. We basically have what computers 50 years ago were like the size of an entire room, and now we have computers more powerful than that on a phone at a fraction of the price. So technology is naturally deflationary. We should be able to just literally stash money under our mattresses, and it should buy you more in the future than less. You shouldn't even need a savings account or to risk your money in the stock market. And so index funds, I'm getting sick and tired of hearing about index funds and dividend stocks, and they're like, how much do you need to retire? 1.4 million, 2 million, 5 million. And I'm just like, those are the savings and investment tools of the past. Real estate is not your investment. Well, this is not financial advice, so I probably shouldn't say your, but real estate is not going to deliver the same kinds of returns that it has in the past. And it's because of Bitcoin, but it's not Bitcoin's fault. It's not like, oh, we should hate Bitcoin because I had my heart set on becoming a landlord, and I was going to buy a house, and then I was going to use that to save more money and buy another house, and I'm going to have 10 houses, and I'm going to retire with that. I saw this guy, he posted he had a $1.4 million. He was retired, and he was getting 43,000 a year in dividends, and maybe he's got rental properties, and that's more income or whatever. But that stuff's not going to cut it. Not with the inflationary environment that we're in now. And so, so I got off on a tangent a little bit there. But yeah, Bitcoin's going to eat everything that you depended on. And I'm even a little bit nervous about index funds because for all of the fear, uncertainty, and doubt that people like to throw, shade at Bitcoin, some of these idiots are still saying it's a Ponzi scheme. Well, who's the Ponzi? Like, who's the guy at the head of the Ponzi? There's nobody there. It's decentralized. People don't even understand what a Ponzi is, let alone understand what Bitcoin is. But to a certain extent, I almost kind of look at index funds. I think you could make a more credible argument that index funds are more of a Ponzi than Bitcoin. And the reason I say that is the only reason the SPY goes up is because of all of this just passive income that just keeps plowing in. And if you get less people, and the birth rates have been dropping, if you get less people, there's going to be less money getting put into it, which means they're not going to be able to buy these stocks. And the stocks that are in the SPY and the VOO are getting artificially, I shouldn't say artificially, but they're getting pumped up because once they make it into the fund, if somebody sends $1,000 in, now they got to go out and buy all the stocks in the SPY. So all of those stocks get pumped up and people don't even know they're buying those stocks. So this is going to be an amazing thing for MicroStrategy once they get inclusion into more index funds. They're in a couple, but I was thinking about this. Bitcoin is going to eat everything. So it's going to eat real estate. It's going to eat, did it already eat gold? Anyway, it's eating gold. It's going to eat bonds. It's going to eat priceless art. It's going to eat real estate. It's going to eat all of this crap. And I'm not saying your house won't appreciate at all, but it's certainly not going to appreciate as much as it nearly used to when rich people used to buy up all the expensive houses, which makes housing more scarce. And then people you're gonna build more expensive houses, and then people are gonna barely be able to, like, okay, how much can I afford? Oh, there's not enough cheap housing, so now I got to buy something that I can barely afford. And it just, combined with zoning laws where they won't even let people build enough cheap houses, and rent controls, which do anything but control rent and just make it harder for poor people to live. Sorry, political folks. So yeah, you're not going to just be able to just sit on those assets like before. And so what happens if all of these passive investors start giving side eye to their returns because it's not increasing like it used to be? Well, they're going to start looking for something else. And if they look and see MicroStrategy's over here going frickin' rocket to the moon, what happens when they start pulling money out and just putting it in a stock that's actually invested in an uncorruptible hard money? The only thing in my mind that could even save index funds is if they include MicroStrategy to begin with. But I don't know if MicroStrategy, even if MicroStrategy rockets up to where I think it can. I mean, I think it can 5 or 10x in the next year and a half, 2 years. And even if it does that, I don't know if it can really save index funds if the population drops and people just start getting disillusioned with index funds. And then people just stop putting it in. The more people stop just mindlessly sending the SPY their money every month, what's the price going to do? And then when there's less money coming in, then the SPY has less money to go out and buy and I'm going to say artificially pump up the price of all of the stocks that are in the SPY. Somebody had a really good article, and they were talking about the companies that have that strategy where they just take all their profits and they do buybacks and they make it into the SPY. And all of these companies that you never frickin' heard of were above MicroStrategy in market cap. And it's just a game. It's just a shell game of how do we manipulate our stock price to qualify for this index fund. And then once you're in, now you just have all this passive income pumping up your stock price. So it's like number go up forever. But what happens when that one, domino falls and index funds just start to unravel? If there's less money coming in, then there's less money to artificially pump up the stock price of the stocks in the basket. To me, index funds could be a bubble. I'm not promising it, but I see so many investors that are just passive index players. And it's like, oh, it worked for, this person. And Warren Buffett said this is the best thing you could do with your money. And I know I may sound like a clown with my little pennies in the stock market compared to what Warren Buffett has. But I'm saying that, eventually, like the dinosaurs went extinct. So all of these people that are trading, if you try to trade with the tools of the past, as soon as something comes in to disrupt it, you're going to get wrecked. So that was the longest way for me to work up to the tools that I'm using for present day and in the future. Number one, Bitcoin. Number two, the only stock ticker that is performing a speculative attack using Bitcoin against the dollar is intelligently manipulating cheap debt to accumulate more Bitcoin than they should possibly ever be able to even own. Nobody else, I saw some, videos by Punter Jeff and Raekwon, and they mentioned that there's a couple other companies that could do it, but it's not likely that they would do it. And even if they did it, like Meta has a bunch of other, I don't want to say like assets. It's not like they have physical property that they need to put in a warehouse, but when you're going to evaluate how much their stock should be worth, you're going to look at how much money, like Facebook is bringing in. And so they're not going to, the ratio of that value to the value of the Bitcoin that they could potentially hold, even if it was equal to MicroStrategy, they're not going to get the same multiple based on the MicroStrategy because they have a greater portion of their business that's due to other non-Bitcoin things. But MicroStrategy has a tiny labor force, and they can just hold Bitcoin and just keep intelligently deploying Bitcoin. And eventually they may be able to just, rent it out, loan it out, take more loans on the Bitcoin that they have to buy more Bitcoin. And it's just this reinforcing, self-reinforcing strategy that they're executing. So Bitcoin number one, MicroStrategy number two, and for me it's Tesla is the number three. So if we're talking about stocks, then Tesla's second best. As far as Bitcoin is concerned, there's no second best. If you are crossing your fingers and hoping that Doge goes to the moon, look, anything can happen. If this becomes a bull market for the next year and a half, some of these, when Bitcoin goes up, everything goes up. But if Bitcoin goes up and everything else goes up, just why not just own Bitcoin? You don't have to worry about a rug pull. You don't have to worry about a development team giving pre-mined coins to their freaking cronies and then laughing at you like the Solana VCs just can't wait to dump their bags and leave retail investors holding their shit coins that are worth nothing anymore. Anything, as far as I'm concerned, anything that's not proof of work, automatic scam. Anything that is proof of work, okay, it may be a legit effort, but it's still inferior to Bitcoin in every meaningful way. So I used to trade all manner of shit coins. I'm reformed. I said my penance. I said, 10 Hail Michael Sailors and, confessed to the Bitcoin priest, and I've been absolved of my shitcoinery sins. And so anyway, I hold enough Bitcoin that if I have to cut bait and just flee the country, I can restore my Bitcoin somewhere else. And after that, I'm basically, at least for right now, I'm just loading up on MicroStrategy, and I've got like maybe 10-20% in Tesla. But I'm a firm believer in Tesla. It's just the conviction that I have with Bitcoin and MicroStrategy is so high, and actually it's not even that so high, but it's urgent. Right now, I just see the writing on the wall that it looks like Bitcoin's about to hit another bull cycle, and MicroStrategy is in the middle of deploying this speculative attack. And so over the next 2 years, it could get sick. Tesla, 10 years from now, 20 years from now, I'm a firm believer they're disrupting. They're the clear winner. The competition is not coming. If it was so easy for the competition to come, they'd have came already, and it's not going to happen. So they're winning the FSD race. They're going to win the frickin' humanoid robot race, and in however many decades it takes to build 10 billion humanoid robots, there's going to be more labor being performed by robots than humans on the planet. What that world is going to look like when wages are driven down to zero and there are no human jobs to be had, I have no idea. Maybe we'll have 8 billion friggin' musicians and artists, and it'll just be a art utopia. I don't know. But so those are the assets. What is the strategy with Bitcoin? There's not really a lot of sophisticated tools right now. I don't really trust the loans. The rates are not really what I'm looking for, and I wouldn't really loan out my Bitcoin and risk it for whatever rates I can get right now. I'd rather just hold it. But with my stock portfolio, for me, it's all about selling covered calls. I know options are scary to some people, but it is, in my opinion, it is the safest trade you can make in the stock market, period. And the reason I say that is because if you buy 100 shares of Mara, because you like mining stocks, it's going to cost you $1,700. If you bought it here, it cost you $31. You lost almost half of it, right? And now you're just crying yourself to sleep, and you got to sit here and wait for it to pump back up again. You got to wait for, if you bought it here, you're okay, cool, it doubled. Did you know this was going to be the top? No, you're probably holding for 50. So then you can't time the market, so you're just holding down here, and you're probably DCAing or whatever. But if all you had was $3,000 saved, and you bought it here thinking it was going to go to 5,000, and now it's here, you're just passive. I don't like passive. I don't like passive index investing, and I don't like just buying and holding and not doing anything. So if you're up here and you sell a covered call and you collect like $1, now your cost basis is 30. And then the price drops to here, okay, maybe you sell a covered call for 75. Now your cost basis is 30.25, or no, it's already down to 30, 29.25. And then you get another 75 cents, 38.50. Now maybe you can only get 50 cents for the rest of this time out. So, but so 1, 2, 3, you can lower your cost basis to like $25 a share. So now the buy and hold guy lost $1,400, but if you can get the cost basis down to 25, okay, now you only lost $800. That's why I say this is the safest investment strategy, because you are constantly reducing your cost basis. And if you sell a covered call every week, eventually your cost basis goes to zero. I'm not going to go till tomorrow because it's not really a good indication of how much premium you can get. But let's go to next week. So that's 6/11/22. So take out 6 cents off of this, take 11 off this, take 22 off of this. You can get $50 next week at the 19 strike. That leaves $1.50 in call away value. That's almost 10%. So every 2 weeks, that's $100. That's $1 off of your cost basis. If you came in at 30, every 2 weeks is $1. It's going to take $30 to get it to zero, which will take you about 60 weeks. Now, I'm not saying, that's what I'm saying, this is not a get-rich-quick scheme. It's not too good to be true. It's going to take you 60 weeks, but then your MARA is free. It costs you absolutely nothing. So now if it goes up or goes down or goes up or goes down, it doesn't really matter because you're playing with house money. And actually, you're still selling covered calls against it. You can make the cost of your MARA negative. Now you have a negative cost basis. This is the tool. This is the tool of the future. And but it used to be hard as shit. I tried to trade on TD Ameritrade, and the options change. The user interface is ridiculous. One of the reasons that Robinhood is so popular, there was like some young kids, early 20s, they were trading Robinhood on their phones. I mean, it's just so easy. You buy 100 shares of MARA, boom. You come in here, you click sell, you click continue, review order. I don't have enough shares. But, boom, you would just hit click send. Send it. That's how easy it is to sell covered calls now. The hardest part about selling covered calls now in 2024 is getting approved for options. You have to answer all the questions for them to even allow you to use options. And if you answer any of them wrong, they're going to be like, oh, you only got level 1 or you only got level 2. And then you have to just go up here and you just buy a stock. You buy a call for $1 and you do 5 or 10 of those. And then after a week or two of doing that, they'll be like, okay, now, they'll approve your request to go get higher options levels. So at worst, it probably costs you $20 if you answer the questions wrong. But if you say that you basically answer everything as risky as possible. Like, I'm a speculative, I'm not don't say that you're for growth or preservation of value or any of that safe crap. You have to say that you're speculative, you want high returns, high risk, all that stuff. So you can kind of figure out what you have to answer, but if anybody is confused and wants to apply for options, send me a DM and I'll coach you through the questions in real time if need be. Selling options is what I do for fun, and I just like talking about it. All right, so reducing your cost basis. Every time you do that, it makes the trade safer. Now, granted, you're cutting yourself off from unlimited upside. So if you sell this 19 strike, you can't profit if it goes to 20 or 25 or 30 or 50. But I mean, most people suck at picking stocks. It's not like people are like, oh, I'm going to buy this, and then 2 weeks later it's at 50. That almost never happens. I mean, maybe if you're in some kind of pharmaceutical stock and they're going to, there's a binary event coming, and are they going to pass the trial? Did they get FDA approval or whatever the hell it is? I don't know how it works exactly. But if they get approved, okay, it might go from 10 to 100, and then if they get disapproved, it might go from 10 to 1, and you're just screwed. So I don't trade any of those stocks. People who are knowledgeable about it, if you're making money doing it, good on you. But something like that probably wouldn't work for me because I want to grind. I want to bump and grind. I want to grind every Friday. I want to chip away. This is what people don't understand. This is guaranteed. So if I sell this, the other guy bought it. This $50 goes into my account. That profit is guaranteed. Of course, you can still lose money on the price of your stock, like everybody else that's buying and holding in the stock market. So it's not risk-free. I'm just saying this is the least risky strategy on the planet, which is why I used to get made fun of by some of the people who put me onto options, because they were like momentum traders. So they weren't option sellers. They were waiting for something to get to a 52-week high, and then there's just this surge of excitement, and it starts to gap up, and they jump in, and they jump out, and they make all these returns. And I'm over here just selling covered calls. And I'm sure their wins were bigger than mine, and some of their losses were damn sure bigger than mine. But, they said they were doing well. But I don't mind doing less well. My whole philosophy is, when possible, make the most you can, and when you can't, lose the least. It's a strategy that I read in actually this guy who was I don't know if he was a famous card counter in blackjack, but he made a business of it. I mean, he made a career of it his whole life, and that's kind of the strategy. Is if you've got a good hand, you want to put more money on the table and maximize your losses. That's when you would double down and split. And if you're looking at 16 and the dealer's got a 10, then you just you're going to lose. But the best thing to do is just take a hit, because the only way you can beat a 10 or an ace, if he's got like 20, you got to get 21. So you got to take your 1 in a million chance. You just can't stand on 16 and take an L. So, but even doing the right thing in blackjack doesn't necessarily mean that you're going to win. You're not going to hit 16 and win very often, like 10% of the time, maybe. I don't know. So that, case in point, this strategy is the safest, but I turned this into a 5K challenge. Well, so far I haven't. I've gotten back to even once, but I've basically turned 5K into 3,800. Why? Because I bought these mining stocks when Bitcoin was reaching all-time highs, and it's pulled back. So while I think that selling covered calls is the correct strategy, it's not a guarantee. But I actually have more in this account than if I had just bought and held, because I've collected hundreds of dollars in covered call premium. So if I wasn't selling covered calls on this 3,800, it would be like 3,500, probably less at this point. So to me, selling covered calls is the safest strategy, but it can also be damn profitable. You would think that limiting your upside would be like, oh man, I don't know, I want it to go to the moon. But if you collect 1% a week, that's 52% for the year. Buy and hold people, unless they're just super stock pickers, are not getting 50% every frickin' year. That is not happening. And if your account grows enough to where you can, probably like a $100,000 account at least, once you get to a $100,000 account, you're not just getting 1% a year, you're getting 1% on 1% a year if you're reinvesting all your profits, which is, the formula for that isn't just 1% plus 1% for 52 weeks, basically 1 times 52. It's 1.01 raised to the 52nd power, because you're going to basically compound it every week. If you reinvest all your profits and you're able to buy an extra covered call every week, it's going to be 67% returns for the year. Those are insane numbers. And like I said, I already demonstrated it in Mara, but I mean, just for the hell of it, okay, CLSK. This is how easy it is. I already bought 100 shares, but if you don't have them, you just change this to shares. You click buy 100, boom. Now, once you've got 100, you click options. You go to, I probably wouldn't just do tomorrow. Actually, really wouldn't matter. I mean, you could go till tomorrow, get 2% return with a little piddly 30 cents call away value. Actually, that's 2%. 1% would only be 15. So in one day, you could get 2% call away value and 2% premium and 2% call away value. I'm usually not that greedy. I mean, I'll go up here and try to just collect like 1%. But this is 1% for one day, which, spread out for five days would be 5% for the week. So I would probably, if I bought this on a Thursday, I'd probably go out here, try to collect 10% call away value. So $1.50 added onto this, it gets you to 17. You sell a 17 strike, you can still profit 10% if the price goes up to or above 17. And this is like, what is that, three times 45, actually 4%. So 4% call away value and 10%, I'm sorry, said it backwards. 10% call away value and 4% ROI. 4% a week times 50 weeks is 200%. So even if CLSK just stayed at 15 for the next 52 weeks, you could still get 200% ROI selling 4% a week. Now, there's no guarantee that this will stay the same, because right now theta is pretty high. There's what is it, the Scholes model? There's a big bunch of calculations being done in the background, but basically the options prices drives the implied volatility. So high implied volatility, it means that these options prices are going to be pretty high. So other stocks, you may not be able to get this much, but Bitcoin is still seen by most of the population as a risk. These mining stocks are considered a risk. The premium is very good here. But even if you wanted to be less greedy with the premium and just, holy crap, 1% for next week is at the $20 strike. That's $4.25 of call away value, which is like 25% of the share price. So even if you were worried about this gapping up to 20 bucks, you could still collect 1% a week. Yeah, you just click, whatever premium you want. Okay, the bid-ask spread here is 5 cents, so you could kind of get screwed on this. This is not terribly liquid. Actually, it should be pretty liquid. 10,000 open interest. I don't talk about liquidity enough. So like, this is a 5 cent bid-ask spread, but if you, with this much open interest volume, you'll probably be able to get this done at the mark price or maybe $1 or $2 less. But some stocks, oh, actually, I'm sorry, I'm looking at CLSK, not Mara. I think this one is actually in increments of a nickel. So I kind of don't like CLSK for that reason. Let me just look at Mara. Go to next week. $20, 38 cents. Okay. Yeah, bid-ask spread is much tighter, so it's only 2 cents. So if you can't get filled at 38, you can just smash the bid and get filled at 37. So there's a little bit of friction. You're going to lose $1 or $2 getting into a trade, $1 or $2 getting out of a trade. But still, this is over 2% at the 20. So there's $2.50 baked in. So 10% would be $1.70. There's like 15% call away value built in and 2% returns. If you get 2% a week, that's 100% ROI for the year. So this is the safest trade in the stock market, in my opinion, and it's damn sure profitable. And I just don't understand why there's so much resistance to it. I don't understand why people are still trading their dad's retirement strategies. But if you're frugal, and you can wait 20, 30 years, it works. But I'd rather be active. I don't know if this is considered high frequency trading. The day traders for sure. This is way more high frequency when I do my taxes. There's so many transactions. I can't even list them on the thing. I basically just have to mail it in. There's an option for that. I'm not a tax advisor either, so forget I said that. But yeah, it makes my taxes a little bit of a pain in the ass. And that's the other thing people will complain about, is oh, I don't want capital gains. I'm like, dude, who's turning down more money because they don't want to pay the taxes on it? Who has ever been offered a raise at their job and oh, we're going to give you a 5% annual raise this year? No, I don't want it. I don't want to pay more taxes. This doesn't make any sense. So selling covered calls treats me very well. It's treated me well for years. 2022 I got wrecked because I changed my strategy and I didn't sell covered calls. So I would probably not be working my 9 to 5 if I hadn't screwed that up. But I'm back to where the premium that I'm collecting every week is actually more than my regular job now at this point. So if I truly had to, I could probably quit. But I can do this in 30 minutes to an hour every Friday. So it's not like this is even back-breaking work, and it's not like I'm putting 40 hours a week into this on top of my 40 at my job. This is kind of easy peasy, and I had to do the work to learn it and understand it. I watched hundreds of hours of videos by Tasty Trade, this guy Adam in the Money, YouTube channel, very educational videos he has. He's an excellent teacher. So I've put in hundreds of hours of learning. But I also did a video about how you can just start trading options in 2 minutes, and I demonstrated it today. Buy 100 shares, click sell call, boom, next. you collected $38 on a $17 stock. A year later, collecting 1% a week, and it's freaking free. All right. I feel like I'm just repeating myself at this point, so I should probably stop the recording. Stop trading your dad, using your dad's tools. I'm sure your dad taught you a lot of cool shit. So if he taught you how to change the oil and he taught you how to, be honorable with your friends and have good friendships and good relationships, and he was a hard worker, do all of those things, have a good work ethic like he did. That's total. I'm not downing your dad. He's probably a cool guy, but you don't have to play the workhorse role like from Animal Farm and just work your heart to death until you're old and then still be like frugal and budgeting. When I'm retired, I want to live it up. I want to roll around in my friggin' Cybertruck. I don't want a lot of stuff, but I do want a Cybertruck. So anyway, use the tools of today and the future. Stop using your dad's frickin' investment strategies. You gotta get on board with the disruptions, or else you'll get disrupted. And I think that's a good place to leave it. Be good, y'all.